Wow, can you believe 2025 is almost over? At least when we're doing this video. It may be over by the time this gets out. But what the purpose of this video is to kind of give you what do we project for 2026. And our first chart here shows really how last year's gone with the S&P 500. We've taken this from Investors Business Daily. And what you'll see, even though we had a bad start with the tariff area in April, we ended up the year up 17.8%, which is well above what I was predicting. I would have told you last year we would have been up about 8%. Now on the next chart, we have the VIX, and it looks like we're going to be finishing the year with an all-time low VIX, which is a positive for the market. Next chart we'll see is the bullish percent. Now, this is how we kind of figure out if the market is overbought or oversold. And just a real quick review, whenever it's below the 30, the bottom blue line, the market is oversold. And you can see that happen back in April. That 4-digit shows that those column of O's that the market was oversold. And then it came back. And right now we are midfield with offense on the field. So it's looking positive for the market. And the next chart shows actually a fundamental change in the stock market. And that happened if you look back in 2011, where the asset group score for the S&P 500, that blue area, went from being anywhere around 50% to being well over 90%, and it's maintained above 90% since 2012, currently right at 95, 96%. That is extremely strong for domestic stocks and another positive for the stock market in the US. The next chart is our cash money market group score. We actually use this one for moving to cash in some of our models, like the dividend growth and the global advantage and the T. Rowe Price. And that occurs when the cash group score goes over 40, which is that lower line right underneath the 50. And you can see we moved to cash in 2008, we moved to cash again in 2016, 2019, and you can see also in 22. We came close to moving to cash in 25 when the tariffs were coming, but it didn't occur. And currently, it's hard to believe, but the money market group score is at 2.5, an extremely low score, which means as far as the stock market, it's still in the positive area with very little volatility. The next chart that we have has to do with the 4-year cycle. And what you'll see is on an average, we're moving into the second year of the presidential cycle. It's one of your weaker years and is usually only up 5.3% on an average. And actually the third year is the best year ever. With that said, it's hard to say what's going to happen. We kind of think with the current administration, with a new Fed that's going to be lowering interest rates, with an administration that wants to run the economy hot, those are all positive for the market, and therefore we kind of think it will be a positive second year for the president. Our next chart that we have is probably, to me, the most important chart that we have here. And this is showing ranking of volume days going back to 1980. And we just had in April of this year, of 2025, we had the third biggest volume day all the way back to 1980. Here's the key thing. Look at 1 year later. On all cases, the market is up, the S&P is up double digit 1 year later. 3 years later, it's up double digit. And 5 years later, it's up double digit. And therefore, what we're saying is the next 5 years will probably be very, very strong for the market. So with that, let's go to the final area, what is our projection? What do we see happening for 2026? Well, we actually have a bracket going here at Charney Investment Group, and if you want to be a part of it, we have a prize for the person who comes the closest to getting the S&P correct for next year. For me, what I'm saying is the S&P will be up 14% or 7,800. So if you have any questions, give us a call. If you want to get in the bracket, give us a call. Hope to see you next year.